What's up, Nikolite? What's up, Docker? Can you guys hear me? Yeah, you should be able to hear me. Live on TikTok, and I'm going to be recording it for my YouTube channel and Discord server. So we'll be going through anything you guys want to have a look at. Crypto, stocks, forex, indices. Just let me know what you guys want to have a look at, and we'll go through it all. Anything in particular you guys want to look at? Just have a look at what's happening in the Discord. Keep trying and be like. Right, let's get going. A lot happened in the past week. We were actually expecting lower pricing on BTC, and if you go on the lower time frame, you could see that. Let's just have a look at that. On the lower time frame, we did have a short from 19.1 down, and we closed at the bottom here. Now we are looking for longs on BTC, right? Tornado, I'm gonna paste a link to my Discord group. Alternatively, you can look at my Twitter handle, but I'm gonna paste a link to the Discord for you now, right? Give me 1 second. Just need to invite someone here. Edit invite link. Never save. Copy link. Paste. Join the Discord link. This is the public side of it, and then come and find me. Username Poison, and then we'll hook you up. Right, back to BTC. So we had the short going down from last week, which we closed down here, and that's because liquidity was taken at this level here. All of this here. Originally we had planned that this was an inducement level here. Price went up and we wanted to take it here and then continue up, but you can see price is a bit weaker, so I did short here and we took it down here, and it took all of the liquidity here, here, and even here. So that would be, or can be, enough fuel to take BTC higher. Now we had a change of character here on BTC, because remember price was trending downward here, and then suddenly it went the other way here, and we had a change of character there. So we are going to see one of two things happen, right? Where we need to see whether this change of character was just merely taking out the inducement here, or the liquidity there, and we continue to head below there. But what we are actually looking for is a reversal here, and we'll keep an eye on the US 100 as well. Let's just open this up, because we do expect some sort of bullish momentum on NAS coming through. Right now we had a change of character here as well on NAS, where price broke above, and we are looking to long a pullback into this region here to take it up there. So same story with BTC, and then we'll come back to NAS. All we need to figure out now is where will BTC most likely reverse from. Are there any order blocks, any zones that we can have a look at on a slightly higher time frame? If you look at a 1 hour on BTC, there's no real order block as such. other than this big one here, right? So this was the block here, this entire last down candle here that led to a move upward. So we want to refine that a bit more, because we can see that within this block there's inefficiency, and I'll mark that out for you right now. We have inefficiency here and down here. So we're looking for some sort of fill of this void before the market moves up. Now remember, for the market to move up here, a lot of buy orders had to come in at this level here, which means if there were any large retailers, not retail investment, if the big boys were short here and then a lot of buy orders came in here, that means they need to mitigate losses by bringing price back down into this level here. And once they bring back price down into this level here, mitigate any losses, close these shorts, then price can turn around and start to continue upward. Now we won't take this level blindly. I have this red sort of box here marked off, which is the extreme order flow. It's the extreme candle or last down candle before the actual move up, and the only way I could find that was probably on I think it was a 1 minute here. We'll just double check that. Right, so it was this candle here. So this last down candle here, which we marked off, the last down candle before the move upward. Now you can see there was some sort of mitigation of this candle here, and then we have the void in here. So it can come as low as that. Obviously, if you're longing, your stop's going to be below the low here. And we're going to take a look at this. Let's just get this a bit neater. There. So this will turn out to be one bigger rejection block that price moves out of. And if we look at a larger time frame, there's even a larger rejection block. If we go to a monthly and figure out why has BTC reacted at these levels and moved away. Let's try and look, could be a weekly. Let me just double check that. Right, weekly level. Your weekly order block was here. To here. This was the last down candle here, and price moved away. So you can see that this candle here took liquidity here, so we can use that as an order block. This particular down candle didn't take any liquidity. It's still within this candle here. So we ideally we won't use that as an order block. We'd use the one that I marked off in green here. And if you pull that all the way across this side, you can see how beautifully BTC has been rejecting off this order block so far. So this could serve as a rejection block where the first or initial move down here was the most that this would travel, and then every subsequent price that comes back into the block here would be would also have rejection, and price will move upward. Bug. What bug? Nico, what bug are you talking about? Nico, I'm not too sure what bug you were talking about. Right. Let's just have a look at the Discord here. I need to create an account. The light. Let's have a look. Stream stopped? No, I don't think the stream stopped. It should still be going on. Yeah, it still is. Still going on. Right. Let's get back there. So this was one large bullish order block there, and price. Nico, welcome back. This was one large bullish order block that we'd use here, and you can see how price has reacted off of it. We also have a descending channel here, and I'm going to look at it from an Elliott wave point of view to see what is most likely to happen from an Elliott wave point of view. But what we are looking for is some momentum or a push upward from this area. Once BTC pushes down down into the fair value gap or the void in here between 18.5 and say 18.7, we will look for longs there. You can see the price has filled in this void here with this candle here, and we are now looking for BTC to do two things, where we either fill in the void here with a move up here, and then we head lower, because none of this is signaling anything or any impulsive move to the downside. And like I said, if we look at NAS, we are looking for NAS to do something like this, right? So this is a fractal of previous price action, and you can see it's very similar to what has happened before. And if we look here on a lower time frame, the idea or the setup has always been that when we have price moving down like this is order flow, and once you start to break a major structure, right? So if we put it even more simply like that, once price starts to change character and break structure here, we would then look for a demand zone at the bottom here and wait for price to pull back into this demand zone, look for some sort of reversal signs here, and then we'll take it up here to target liquidity here, here, and here. So same story with BTC or any of the other commodities we're looking at. We're looking for reversals on BTC upward, longs below us, which means that price can most likely do two things here. If we don't get the move down here into the zone that we want, it means that BTC can needs to grab liquidity, and the way it can do that is we're either going to come into here into the weekend open and then come down, change here, and then continue upward, or we are going to continue upward here, take liquidity here, leave an inducement level of liquidity here, come back and take it, and then move away. So we're going to watch for either way, but here's the setup. Like I told you, price is moving downward. It made a new low here, and then suddenly we had an impulsive move upward that broke character here. We are now looking for price to pull back into some sort of level down here, reversal pattern, and then we want to head up higher. In terms of an Elliott wave count, I've been looking at it. Just open up this a bit wider. BTC has been channeling here. In terms of an Elliott wave count, we were always looking at some sort of 1, 2, 3, 4, 5 wave pattern to the downside, where this was your initial first wave, this was your second, this was your third, and we don't know where the fourth and fifth were. So if this was a third wave here, then we are somewhat still in a fourth wave, which means that we need to figure out where the fourth wave is likely to end. If we use channeling here from wave 1 to wave 3 projected from 2, you can see it says something somewhat here. In terms of retracement, wave 1 retraced 50%, so we can expect wave 4 to retrace about 50%, which means in the bullish case we could see BTC push for 28-29k, reject here, and then start to head lower here. If it does head lower, we're looking for an extended fifth wave, seeing as wave 3 did not extend but is still bigger than wave 1, which means we take from wave 1 to 3 projected from a possible 4, and 100% extension would bring you down to, like we said before, 6k levels on BTC. And that should complete it. That should most likely be a bottom on BTC, retest the COVID lows, and then we'll look for price to move upward. If it doesn't, it means that this was just one leg down. We see some bullish momentum back here to take out all the inducement levels, and we have one capitulation event which takes everything and then moves very fast away from the level there, right? That's what we would be looking on BTC. On the lower time frame, like I said, there's a lot of contraction happening here, so we are looking at an expansion phase. We are in one large rejection block, and we need to figure out whether we can enter some longs here to fill the void in here, or head up higher there with NAS before heading lower. If we take a look at NAS 100, same story here. We're looking for, this is the last high before the break of structure here. Now we created another high here. If we make a lower low here again, it means that NAS doesn't have to come back to this level. It can come back to this and then continue rolling over. But what we are looking for is we change character here, any pullback into this level here, and we're looking to long back up to take out the inducement level here, and this is at the 50% of the entire move down. So I think if we took from the top here to the bottom here, yep, that's 50% exactly. So a 50% retracement before further downside on NAS. Keeping that in mind with crypto and BTC, we would then have to look at a bigger move down. Like we said, it lines up with our wave 4 on BTC, where when NAS hits that 50% level here, wherever that may be, or whenever that may be, sorry, yeah, here we need to see whether BTC is going to be at this point or a little higher here as something like that, and then we head on lower, or even higher somewhere here and then we head lower there, because we do expect, or I do expect, one more push to the downside for BTC. The move will be pretty simple. We have all the levels marked off here. This is in an order block here. It's a daily level, so everything's been marked off on NAS in particular. We have some naked point of controls up here. We have an optimal trade entry, that's just the 75% of this move down here. In the green zone though, there's a lot happening in the green zone, where we have the daily point of control, a 4-hour bearish order block, a daily bearish order block, and a fair value gap on the daily, as well as a value area high. So a lot of confluence, a lot of things happening in this 50% region. And once we get there, we will be looking for one more downside. So this would be the wave 4 here on BTC, the wave 5, and then that push back up here. Now here's where it gets interesting. Will this be a larger flat type correction and we head lower, or will we just retrace to this point and then head higher? Not too sure at this point. But what we do know is when we short here at the 50%, the next move up after it should be a long-term buy. What's up, Beanie? Is there anything you guys want me to look at in particular? I've gone through this, the setup for BTC. I think we have it in... some don't have TikTok. We plan on going live without it. Can't see it either. We'll wait for the recording. We're too boomer for you boys. This, guys, I'm recording. No stress. Let me know what you want to look at here. Nas is playing around. We're all waiting on that sweet buy for NASDAQ. Kalen Moses. Let's have a look at NAS again quickly, right? This is just a fractal of price or expectations that I have on NASDAQ on the lower time frame. Price like this and price movement like this. So we had a gap down. Let me just close this off. Price gapped down here. I think that was CPI. Filled the void here, so you can see price immediately fill the void. So that's bullish price action there, and we broke the inducement level here, or we changed character here, Price came in to this level. We took some inducement here, liquidity here, here, and here. Now, ideally, I'm not such a big fan of what happened here in terms of this trend line liquidity, but we made a new low here, right? That broke structure here. Technically, the last highs before that broke structure was here. NAS has now taken that liquidity there, which means it doesn't have to go higher. It can continue going lower because it's taken the liquidity that it needed to head down lower, right? But what we are looking for is, if you can see, we've got a long-term channel here that sort of holds at the bottoms. We bounced off the bottom channel here, and we're looking to head higher. Higher, just to grab more liquidity. Let's just zoom in there. Right, because like I said, the setup is when price does this, and then suddenly we break structure or change character there. If we have a paddle sort of channel, we find a demand zone here. As price enters back into the demand zone, we look for a reversal here. Taking this blind is dangerous. If we look for reversal, you'll have your first entry here. This would be your second entry at this demand zone, and then that's the move up. So same story here on the left. Price change character here. We're looking for, it can even go and do this coming week and then fall lower. As long as it comes back into this, yeah, as long as it comes back into this and we see some sort of reversal structure here in the fair value gap. So at a key area, fair value gap, bullish order block, all of those, if we start to see price reversing or wanting to reverse in this area, that would be a long opportunity, because your next port of call or point of control would be to take all the liquidity to the upside and the 50% retracement. So it means we take liquidity here, we take the liquidity here, and we head up to the 50% of the entire correction, which is in this level here, around 11.9, 12K. Once we enter that area, we'd look for signs of rejection and failure here, right? Once we see a break of structure here on a little bit of a higher time frame, any supply zone here would be for shorting, and we'd look to take NAS down lower, like I said here, following the fractal that I did put up here. That's what we're looking for. Now this sort of price action is just indicative of whatever's happening here. So if you saw it here, you saw something similar there, you saw it here, and now we're looking for something similar there, right? Nothing too fancy. Just give me a second, guys. I want to share the link to the live on my Twitter, which I should have done. Right, let me just share that. Anything in particular you guys want to know, just pop it down in the comments. I am recording this for my YouTube channel. Copy link. Where can I paste this? There we go. Ask me anything. Sorry about that, guys. Just sharing this on my Twitter. Done. Right, back to the business. Squishy is mine. what's going on here is I normally do a weekly live stream. Today I decided to change things up, do it on Twitter, on TikTok, share it to my Twitter. I'm recording my screen and I'll post it on my YouTube channel for those who haven't seen it on TikTok. That's exactly what's happening right now. I have a monthly key level on my monthly time frame and she reacted on that key level. What monthly level was that, Kaylin? Let's take a look. Right, so the monthly level would probably be the bearish order block here. Let's have a look at this. Here, make that blue, we'll make it a bit bigger. There and there, right? Let's go down to a lower time frame and see how that looks. You're talking about that, right? Reaction of that bearish 11020. 11020 here. You're talking here somewhere. What's up, Buxy? Sorry, there's no PUBG or gaming content here. This is for the big boys. So pretty much simple across the board. If you look at oil, it did take the zone that I initially had marked off. It did break below it. So I'm starting to think on oil in particular that this middle wave here was just inducement that broke structure here, and this was the liquidity here that came into a supply zone here, and then we actually head down lower for oil. I did want or did expect oil to reverse from here, which it hasn't. It's made a new low below this, so I'm just gonna have to see what happens on oil here, whether this was just taking the liquidity it needed below here, and if we see some structure, bullish structure here, then we'll still take that move up on oil. I'm not too sure what to expect because they did cut down the production of oil. So if they reduce the supply, technically the price should have went up, but the price keeps pushing down lower. We'll have to have a look at what's happening there. Yeah, so Bitcoin pretty low liquidity in the weekend. Nothing really happening here. We have the weekend open. Like I said, it could have pumped into there and then lower, or it can pump higher. If it pumps higher, this would be the inducement level here, and especially more valid because this level here was before the actual level that we wanted here. So if it breaks structure here, people will get long here on breakout, put their stops below here, then price comes back, takes it all, and then pushes away. So I actually like that move a bit better, where price starts to move away from us, then comes back and takes the level and moves away. That will create more liquidity there. Any altcoins or anything in particular you guys want to look at? Ethereum reacted off our 6-hour fair value gap. You can see the reaction here. There's also some naked point of controls just above us. Down to a lower time frame, there's no real sort of order block here. It's one large zone here, right? Because this move was so big. So we're looking for reactions. There's a fair value gap here and a fair value gap here. So anything that comes back into this level here, your stops are going to be below here, and we're looking for reversal patterns to take it higher with BTC and the rest of it. QNT, I'm not too sure what's happening on QNT. This has been ripping up. We have an inducement level here, which we have now taken, which was the high before the break of structure here. Price came back and took the inducement level here. there's not much of any sort of order blocks or anything bearish happening here except for the fair value gap which we have in the monthly. There's an optimal trade entry here, which is a 75% retrace of this entire move down there. We could expect some sort of reactions up there, 75%, 79%. If that is the case, the levels that we are looking for is up here or here, and then eventually come back down here, pull orders, and then move away higher. Right, because like I said, there's the pattern being made here, right? Let's follow it again. Price comes down, runs the low, breaks structure here, pulls back into a demand zone here. We look for reversals here. First entry, second entry, and we look to target the highs or something higher. Right, same story here. Let's go back here. Ran the low, came back for the high. We're above it now. We've broken structure. Now we look for price to head back down to grab orders, and then we head higher. I'm just not convinced entirely just yet, apart from the fact that we are in one larger rejection block for BTC. If we look at there was a distribution pattern that happens here, right? So price moved down here like this, and then the pump up takes the liquidity here, fills in the void here, right? So that's the first void fold. The next one here comes down here. Let me try and find that in the PA pattern. Pullback might be what the long SPX, oil, and XAG. Yeah, we'll have a look at that. Slothman, we'll have a look at that. Hold on. Copy image. I'm going to paste this into TradingView. Hopefully this takes. Right, let's have a look at this now, right? This is an image of BTC overlaid. Let's make it a bit bigger. Right, can you see that? Price comes back to fill in the void, which you can see the first void fold, heads lower, comes back to fill the second void, and the second void is actually here. Right, and then heads lower. So this is the first area we're going to look for shorts, and the second one would be much higher if it is more bullish than we anticipated. Something we'll have to watch out for, because there's no real structure here to tell us that anything bullish is going on. Same with Ethereum. It's changed character here, but I'm not too sure about the breaking structure point or part of it. Let's just have a look at it on a higher time frame. You can use the market structure break indicator here. Breaking structure would happen above here only, right? That's also an inducement level. So we're hoping to come down lower here and then head higher here. But it could head higher and then lower and up. But all in all, we're looking for longs across the board on crypto, NAS, S&P. Let's see if we can take a look at the S&P 500. It should almost be in the same pattern. Yeah, it is, right? Down to a lower time frame. SMC PDF, yeah, I'm working on that, user 535. It should be out next week. The SMC PDF should be out next week. Right, we reacted off the optimal trade entry and a fair value gap, naked point of control. This is why you had the reaction the other day. Same story here on as it is in NAS, where we change character here. So we had a push down here, but change character here, and we are now looking for price to pull back into a demand zone. So this is the zone we are looking for. There's the order block here, the H1 order block. It's marked off here. It's just there. Alright, the last down candle that took liquidity here. You can see it took the liquidity here. So that would be serve as our demand zone. And when price pulls back into that level, that's the level we're going to look for longs, right? So it can still come up here, create a little bit more liquidity, then head down, reverse here, and then push up here. We don't want to see anything lower than this for longs right now. Target for this will probably again be the daily bearish order block here, naked point of control. There's a 4-hour bearish order block, 4-hour fair value gap, a naked point of control again. This would be inducement, this would be inducement. So there's liquidity, there's money lying above those areas, money lying here, and there's money lying here. So come back into this level here and then roll over again, right? That's what we're looking for. Same story for NAS, same across the entire board. So this week's going to be interesting. We're looking for longs. Just not happy about oil. I expected oil to push a bit higher first. Ideally, back something like this within this larger range and some a 3-drive structure into the level where this was the first, this is the second drive, and then this is the third drive, and then we roll over. Just not sure if oil has enough in it to do that. For our, on the lower time frame, we're looking for, let's just shift this a bit more to the right, delete that, delete that, delete that. Right, we've taken liquidity here. Is that enough for oil to roll over and continue higher? Or let's mark off the ultimate zone that we look for oil to come into, and it would be down here, right? Same setup, same structure. Price came down here, change character there. Now we look for price to come back into the demand zone here and then higher there, right? That's just the setup. I did want one more push up here, but it'd actually be a better long down here than actually taking longs here and looking to take something up there. Right, so I on this level here, Slotman. I wouldn't chance any longs now since we did make a lower low here. So unless this starts to give us some bullish break structure here, then when it comes down here, we can look at taking this out and breaking this structure, which would give us higher confluence for longing anything on a retracement. For now, we are stuck. Let's look at 50% here would be from here to here. We're not even at the 50%. So we'll wait on oil. Nothing happening with oil. No triggers on oil. What else do you guys want to have a look at? XAG, I think you said. Do I have XAG? XAU? Gold. Right, so this is what we had for gold. We had the H4 order block here. You can see it reacted off the H4 order block, but more in particularly, you had a larger downtrend line, which you can see here. Right, reacted here, and now reacted there. If we expect any sort of reversals on gold, it will happen from this green area that we are currently coming into right now, because again there's the same pattern that I spoke about, and a reversal pattern. Break of structure there, price pulls back into demand. It tapped the demand, so people will or should start scaling into longs within this area here. Once we are in here, there's a fair value gap. There are two naked point of controls here, which means untested point of controls. It's an H4 fair value gap, so that's a void, and a value area low. So a lot of confluence in this area here. So if gold starts to give us this kind of vibes, or especially this, any pullback here would be for longing here, or any reversal in the green zone, stop below here, would be for longing there. XAE, that's XAU. On a larger time frame, let's have a look at gold. Pretty much doing the same thing BTC has done. So I'm not too sure where this is headed. We could be headed a bit lower here, or take out the inducement sort of levels here and then head higher. A little unsure right now, but let's have a look here. 50%. Anything within this 50% to 61.8%. It has broken structure here, remember that. So what would be nice is if we can get a long off this level here, which fold in this fair value gap here. Ideally your long would have to be off, this is one big order block, right? But there's no fair value gaps on the weekly here. Let's just have a look at the daily. Not much happening until here, down here. So gold could head lower before it heads higher. But if we are looking for a reversal, then there's a lot of liquidity lying on gold above us that we can take first before we head lower. Meaning, if we reverse here, we've got liquidity here, we've got liquidity here, and we've got liquidity finally here in sort of a void here. So any pullbacks like that would be a short opportunity to send gold down lower. So yeah, I will look for longs on gold, see what happens there. XAG, I think we had this Slotman, we had this level marked off here as a fair value gap. So you can see price came in here like this, ran the low. This was the inducement or change of character here. Price broke up. Now we're looking for price to pull back into a level here, which either is going to be in the fair value gap there, or let's neaten this up. The last down candle or the bullish order block there. Right, anything in here on the lower time frame, any fair value gaps down here. We have a fair value gap there. Just make that purple, bring it down a notch there and there. Right, so although you may see a reaction here, ideally we're looking at silver there. Let's put a eye there and set some alarms. That's the level. What's up, Itzy? Right, let's go on. You want to have on US 30, and let's take a look at US 30. Why not? Just give me a second, Itzy. So I'm just going to delete all the drawings here. So you have a trade set up on the US 30. You mind walking me through the trade that you have set up? While I look at the levels. So firstly, you're reacting off a breaker block here. So you can see your initial reaction is this. That's a breaker. That's why we are seeing some reactions there. So your breaker block, basically, in this case, I usually show this in the bullish form. But what happens here is, this was the character here, right? Price pulls back, and let's just show this here, 1 second. Right, so your breaker, price failed to make a lower low here, right? Price broke straight through it. So if you want to call this something like support and resistance, or in the basic form, this would be your retest happening here. Now all we have to do is drill this down to a lower time frame, see if we can find, besides this being a breaker, a bullish breaker, are there any bullish order blocks we can work off of. Nothing really on this side of the world, right? Other than here. So you could see US 30 head a bit lower, but ideally I don't want to see that, because we expect the US 100 to head higher. So let's just go down one more level here. Now here's what I was talking about, which US 30 is already doing, right? Let's get rid of the breaker. Right, so this would have been your order block here. You agree? That's your demand zone. This was your change of character. Here, break of structure here. Now you can see how from the previous models that I just showed you, price came here, broke structure, pulled back into the demand zone, and then shot away, right? Now we need to figure out where's the next point we can enter. And the next point, if we look at it here, same story on this time frame here. Price shot up, came into this bearish order block here. In this case, it's going to be this entire block here on this time frame. Sell zone. And now we're looking for, let's go on to a 1 hour and have a look. On the 1 hour, it's going to be a bit difficult. We're going to have to go a bit lower, because on a 1 hour, oh no, there's it here. Easy, simple enough. Here, we're going to look here. That's going to be your long here, ideally. This is the level we're going to look at. Is there anything else we can see to help us there? Yeah, of course. There's a fair value gap here. fair value gap here. Right, same story as NAS and the rest of them. This is your demand, this is your bullish order block. There's the story I was telling you. Price came here, ran the low, broke structure. Now whatever it does in here, whether it creates liquidity like that and then pops down here, we're not interested. We're only interested in what it does when it gets here. When it gets here, we're going to look for signs of reversals. So signs of reversals would mean it comes in here, right? Once it breaks there and back above here like this, once it breaks structure here, we'd look for any pullbacks into another demand zone here to take it higher. That's your first entry. This would be your second entry, and then you take it up there. Entering on this blindly is a bit risky because you may have to use an ATR for your stop, and it's not going to be just below here. It's probably going to be down here somewhere. Right, so yeah, that's the setup. Setup is same as NAS, it's the same as oil, it's the same as Bitcoin, it's the same everywhere. It's the same setup. What I don't like, and what's going to happen later on, is price is going to come back and take these relative equal lows here. That's not a good thing, right? Sorry, new keyboard, relative equal lows. Right, relative equal lows, that's going to get taken off at some point. If we are targeting anything to the upside, let's just go up one level higher. Right, let's go look here. So what would be your target if we take from the swing high on a daily time frame? So I'm going to use the wicks, not the candle bodies, to the swing low. We would look at the 50% firstly, which is here. Right, that's the 50%, and then your 61 or 62% there, and finally your 70.5 there. So those are the three levels we'd be looking at. But which one screams out a bit better for us? Let's just mark this 50% again. The one that screams out a bit more than the rest would be ideally the one up here, and I'm going to show you why now. So if we had a break of structure here, right, if this was the break of structure to the downside, break of structure, then this was the last high before the break of structure here, right? That's your inducement level. That's where liquidity is resting, liquidity is sitting. And even if we draw an order block up here for this, you can see that price is going to come back and most likely target this at the optimal trade entry. So this is also going to be an OTE lying here. Right, OTE 50%. There, and then the 62% above it, break of structure. Ideally you want to target the inducement level, right? Remember in one of my I'd start scaling out at the 50%, because if you look at price in terms of a premium and a discount array, right, where anything above the 50% is considered in a downtrend, so you can see price is trending down. Anything above the 50% in a downtrend is considered a discount, right? Which means it's discounted for selling. and anything below the 50% in an uptrend, if that was the 50%, is considered a discount. So we'd look in this area here, ideally take out the inducement here. If we go down maybe to a 12-hour, we not really seeing, there's, okay, let's look at this fair value gap here, right? There's one here which is already filled, back up there. Let's go down one more level. This is going to be the order block that we would most likely use and come into, right here. This candle, now don't worry about the color of the candle, worry about the fact that this candle here took liquidity above here. So we would consider this to be an order block and a bearish order block there. Sorry, turn the magnet tool. So this would be our bearish order block to eventually come back into, if anything, there. Inducement level here. Fair value gap here. Here. And you can see that this one I think already got hit up there. So we got a fair value gap at the 70.5% OTE. Let's see how that goes. Let's take it one step. Yeah, let's take it one step further, right? I'm just going to put in the visible range volume profile here. And we'll start to figure things out for more confluence. Now you can see that your 50% is also the value area high. So we have the point of control for the entire range down. Most volume occurred here at the point of control. So this is your point of control. It's where the most volume occurred. I'm going to drop that down a level there and wrap a border around it. So that's your point of control. Your value area low is the low volume node there. So that's your value area low. Your value area high is where you're going to see some reactions, and that coincides with your 50%. So the best way for me to explain this would be that this area here would be like a bell curve, right? And this would be the most traded area here. This would be the top of the high volume, and then this would be the bottom there. So 50%, yeah, looks good. We'll take it one step further than this. Satnaka will have a look at gold again just now, although I did cover it. We'll take it one step forward and we'll look at the volume profile and have a look if there's any naked point of controls, so basically levels that have been untested above us and close to where we want it to be, right? And first up, let's have a look here. We have one here, right? One here. Let's mark that off as a naked point of control. Delete that. So this would also be an area where price can revisit. Second, we have one down here. So we're going to watch for reactions here. And there hasn't been any other point of control, so we just have this one and that one there. Any point of controls below us would be here. So you could see price start to react there as well. Right, let's take it one step further. Let's go down from a monthly. No problem, Itzy. Nope, not a problem at all. So in terms of a monthly, we can see something going on here, right? I'm just going to mark it off in blue. So you should see some reactions coming there. Throw that down to a weekly, and you'll see reactions up there. We'll make that orange. That's the last order block up. On a daily, you're going to see reactions happen here. We'll make that red, and we're going to see reactions happen here. Horizontal ray. So these are just daily order blocks, right? Blue for monthly, orange for weekly, and red for daily. Okay, now let's go down a bit lower. So now we start to see even more confluence happening across the board. Right, we have the 50%, we have the optimal trade entry. We have a bearish order block up here. We have inducement level here. Naked point of controls, value area highs, more naked point of controls. Let me mark this off here because this is the 62%. Right, so those are your confluences there. I don't think you'd want to see any more. I don't think there could be more. But what do we have? We have the fib levels, we have volume levels, we have SMC concepts in terms of inducement. Like I said before, the break of structure was here. This was the last high before the break of structure. This becomes an inducement level. If you go back and watch my previous TikTok about entering and breaks of structure, where if you have price trending like this, right, this sort of becomes internal range liquidity here, where you move, if you're long, you move your stop from here to here, right? Then what happens? Price comes back and takes that level of inducement. So this is the inducement level, takes your liquidity here, and then continues to go upward. In a downtrend, it would look like this. Price comes back and takes the level of inducement and then continues down. Same story here. There's your level of inducement. Price comes back, takes the level of inducement. Price goes down. Yeah, when I have time, I'll do the gaming content as well, Itsy. Right, there we go. So that's US 30. I think I've went as deep as I can go in terms of finding the levels and confluence for the US 30 for you. I'm just going to set some alarms here, down here for US 30, and up here at the 50%, 61, and the 70.5. Right, where was it? Where was Satnaka? Satnaka, let's just go back there quickly, or cover it again. This was the gold. So what we're looking for in gold. And this is the area here we're looking for, ideally. Right, change of character here. Break of structure here, price pulls back into the demand zone here, we get some sort of reversal pattern, and then we take it higher. Higher where? Higher would be here, liquidity lying here now again, liquidity lying here, and liquidity lying there. Ideally, on a higher time frame, this would be your inducement level here. right? Because this was the high that broke through the structure here. So price comes back, takes the inducement, and heads down lower. Let's add a little bit more confluence there and put in the fib levels. Right, that's your 61.8%, just above your 50%, so your 50% is here. 50%. Here, 61.8% here, and then your 70.5 here, which is the optimal trade entry. And this is the, let's call it the 62%. We didn't do this for gold. Right, value area high, value area low, point of control. So you want to avoid trading around the, right, so you want to avoid trading the point of control at all, right? And one of the main reasons, and it was a video by, you can have a look at, his name is Adam, and he's from Trading Right, where he explains what the point of control actually is. And I think he used the housing market as a reference point, where if you look at this being your graph here, and if this is the price of a 2-bedroom house, right, let's call it here, right, 300K. So this is the point where the housing market is in equilibrium, right? If the price of houses were to jump up to say 700, it is considered a premium in the housing market because the norm for it is 300. People would start to sell. So this would be your value area high here now. People would start to sell back down to the point of control. Adam is Trading Right. Google him, YouTube him, Trading Right. You can check him on Twitter. In fact, let's call this 500K, not 300K, right? 500. And if this is 300K here for the house price of a 2-bedroom house, and if price starts to go down to 300K, then it's considered cheap, right? Because we know the price of houses or 2-bedroom houses is 500K. So when price comes down to 300K, this is the value area low. People will start to buy, and then they'll look for price to go back to 500K, where they would most likely sell, right? Now this is where your volume comes in, because it would then start to look like this, right? Now when you load your volume area profile, let's get rid of all of this. You have your point of control, your value area high, and your value area low. This is what I was talking about. Where if this is your point of control here, you want to avoid trading around the point of control because there's too much happening here, right? It's neither discounted or at premium. But as soon as price goes to your value area high, you can see people will sell back to the point of control. And as soon as it goes to the value area low, people will buy up back to the point of control. Does that make sense? Avoid the point of control. Trade below it or above it. Next, is there any naked point of controls for gold? Let's have a look. Straight away we can see that there is one here, at the 50%, so we'll call that an NPOC. And higher, there is one here, but we know price could go there, around here. So those are the two most recent or most visible untapped point of controls. So you can see the setup is pretty simple in terms of how if you just start to think of how is liquidity engineered in a market, right? Liquidity is engineered. Without liquidity, without inducement, there's no trade. So like I said before, if this was the move down, this would be your inducement level. Price has to generate liquidity somehow. How can it generate liquidity? It takes your inducement level, it generates liquidity by taking the inducement level and then head lower. Alternatively, you'd start to see price do something like this, right? Internal range liquidity, so this is the top of the range, this is the bottom of the range. You'd see price do something like this, do something like this, and then come up here and take this internal range liquidity into a point of interest or supply zone, and then head lower. So that's one way. So the first way was, we said it comes back and takes the inducement level. The second way, it generates internal range liquidity and then sells off. So if there's no liquidity taken, there is no trade. I've said that before. The fourth way, and I've done a video on this, the 3-drive pattern wave. This was your point of interest. We have a first drive into the level. Price pulls away. That's about 2016 to end of 2015. Let's see. I'm an old man. So this is your first drive into the level. If you don't believe me, I'm going to show it to you now, right? This is your second drive into the level. That takes out the first drive. So you can call this drive number 2. And then you get a third drive into the level. Price pulls away. Looks like it's breaking structure. And then you get a third drive into the level. That takes out the second drive high. And then we get a break of structure, the pullback into a area, and then a sell-off. Right, now the two forms of inducement that I just showed you, right? Or three. I showed you one where this is inducement. Price takes the inducement and then heads lower. So that's one form of liquidity. The 3-drive is the second, and the last one was the internal range liquidity that is mentioned, right? There. These three forms are liquidity engineering and how price takes liquidity. Now let me go back and show you examples of this. So I've got it in my Discord group. I've marked it off. I've traded it, and I've done a video on it on TikTok. Right, let's look there. BTC, right? Let's look at this on a lower time frame, just to show you what I'm talking about. I'm going to use a different chart so it's not so untidy. Right, here we go. Here's your inducement and your three-wave move, right? This was a break of structure here. Price went lower. This was the high before the break of structure, so we call that inducement. This was the pullback into that level there that took the inducement high, and then price continued to go lower. Right, so that's one. The second one, you can see within the inducement level, we had a three-wave push to the top side. So what did that also create? This created liquidity here when price started to move away here. People that shorted here would have placed stops here, and price takes those stops, takes the inducement liquidity, and then rolls over. So that's your second form of liquidity engineering. And your third was the three drive that I showed you, where this was the break of structure here. This here was our point of interest on a higher time frame. This was drive number one. This was drive number two. And this was drive number three. You can see that each drive took the liquidity past the previous drive. So 2 took 1 and 3 took 2. Now here's an ICT concept called the power of 3, right? Even though we created trendline liquidity here, right? This is another form of liquidity, it's trendline liquidity. You often see price doing that, hugging a trend line, which means as price keeps moving up like this, that's the bullish order flow, there is constantly and consistently orders or stop losses being placed between underneath all of that. That is why a spike like this can take all that liquidity there. But this one in particular is called a power of 3, where this would have seemed like a break of structure, and when price pulled back into here, you would have shorted here, hoping the price went down there. But this is the accumulation phase. This is the ICT manipulation phase. And then this finally, this is the distribution phase, lower, right? So accumulate orders, take out stops, manipulate price, take out more liquidity, distribute, right? Power of 3. So I've just shown you 3 SMC concepts as well of how liquidity can be engineered. So now you have to ask yourself, every time you take a trade, has there been liquidity taken? If not, let's look at the latest NAS one, right? If there hasn't been any liquidity taken, then how can we take a trade? Should we be taking a trade? Let's look down here, right? We get rid of all of this. Right, let's look here, for example. You can see that price was trending upward here, right? This created that inducement level here. Price pulled back, took the liquidity here, ran the highs. Because what this move down here would have acted like is a change of character. As price pulled back here, people would be short in this supply zone. But the power of 3, where we have accumulation, manipulation, run the highs, distribution. inducement level, the low before the break of the high, taken, manipulation, distribution. So if liquidity is not taken, there is no trade. Here there was no liquidity taken here because this was a equal high. And if we look to the left, other than this being, there wasn't any real or key point of interest to the left of us, other than inducement level and liquidity is being taken here, here, and here. So for us to head down lower, we needed to take liquidity somewhere. So we took it here first with this move. Then we took the highs here with this move and then low. So if there's no liquidity taken, there is no trade. You guys get that? Let me just have a look if there's anything else. I think I covered XAU, XAG, QNT, Sol. Let's have a look. Since 2016, ITSI. I've been trading since 2015, 2016. Crypto. Right. So Sol, you guys know the higher time frame story. 5-wave move to the top side. Wave 1, wave 2, wave 3, wave 4, wave 5. Looks like a 5-wave move. After a 5-wave move, you know that we expect some sort of correction, and the correction needs to take at least the same amount of time or longer than the impulse up, which means whatever is happening here is a first phase, which means that this was probably wave 1, 2, 3, 4, 5 as an A wave. We then get a B wave to the upside, A, B, C. So this would be your A wave, your B wave, and then finally your C wave, which comes down to about the low of wave 2, 61.8, 75, 70.5%. We'll check what that is now. Right, so here somewhere, ideally, or the 79%, either or will work out. Right, so that's also in line with what we expect for BTC on the other time frame. I picked up in, I won't call it ICT, let's call it price action, right? Price action, it's about 1.5 years going on to 2 years, and I didn't start price action with ICT or inner circle trading because before his 2022 mentorship program, most of his content was a bit too dense, too heavy, so I didn't quite grasp his sort of concepts. So one of the traders on Twitter put me on to Chris Laurie, so you guys need to check him out as well. Very old trader, but and his type of trading will actually resonate more with you. It's just that ICT has made his recent content more what's the word? More palatable, right? So you can understand it a bit better than what you used to be able to understand it. Chris Laurie would be consumable, palatable, digestible, whatever, right? Chris Laurie is one of the, I'd say, fathers of price action trading, together with what's up, Ryan? Together with Paragraph trading. Now, I don't care much about whether one guy took another guy's concepts and made it his own, whatever it is, right? none of my business. So if you want a more rounded off sort of look in terms of price action trading, then take a look at Chris Laurie and Paragraph Trading. And on Twitter itself, there's a lot of guys, some of which are my friends, that are ICT 2022 mentorship kids, right? So they are fresh out of ICT, and the amount of knowledge that these guys have and show and tell you every day would be astonishing, right? So we're trading naked price action, hardly any too many. You won't see me use RSIs and oversolds and overboughts, because to be honest, those are lagging indicators for me. I won't trade them. I've tried everything that there is or has been to do with trading. I've tried all the indicators. I've tried all the styles. I started off doing Elliott wave trading. I'm one of the most knowledgeable Elliott wave traders in the world. I'm not even lying. That's how I started trading, and I've done for over 5 or 6 years. Price action more recently, but the difference is price action will get you the entries. Elliott wave will tell you the high time frame direction. Right. Sol. Ideally, we want to get above these levels here. Slotman, if you're watching this, where this would be the level of inducement here. Price broke the lows here, so once we start to push above here, we need to watch what happens here, because we've now taken liquidity here. Price can very well roll over there, or if we start to push higher here and price pulls back here, then we'll look at taking the inducement or liquidity up there before rolling over. Right, so it would look like one sort of giant flat type of correction before price heads lower. On the lower time frame, the setup, like the others, would be almost the same, where we look for price to come back into the rejection block, let's call it here, and we'll refine it. Let's get rid of this. Let's make this green. Can we refine this even more? I try not to be too exact, because what happens is you find that price may miss your entry, right? So we'll just keep it as a general rejection block. So here, Slotman, we had a change of character here, break of structure here. Price, like I said, price can do this, this, back in here. This is where we would be watching. And we will take longs there and look for those upside targets that I told you. Simple enough. Or at least sounds simple enough. Right, looking for inducement liquidity to be taken above here with that 3-wave move that I just showed you, and head down lower. Or if we start to break a bit higher here, hold this level here, then we'd look at going higher here, take the liquidity here into a void somewhere here, and then head down lower. So that has been most of the stuff that I could tell you about. And I did say, let's have a look here, go back to my chart. Let's have a look here. I did tell you guys in my Discord that, let's have a look. Yeah, we can pump into the weekly open. I'm sure I told you guys that here. Bearish order block, pump into the mark of the weekly open and pump into it for a short opportunity. Let's have a look there. There's your pump here, coming into the weekly open, right? So I did mention here, mark of the weekly open, pump into it for BTC is a short. There is a bearish order block there. This was the chart that I showed you. Yeah, that's the weekly open at 19,442. So pump into it would be we'd be looking for shorts. Let's take a look at it. Right, inducement here, break of structure here, inducement here, change of character here, and on a lower time frame, I'm just going to show you something really quickly, right? This is how we look for changes or reversals. Now, with bullish order flow, you had a change of character here and a break of structure, right? You agree? You would mark off the demand zone. Now, I know my voice is not as cute as the kid's voice that I use. So you mark off the demand zone, you set your order, stop below the low, you target a recent high or highs there, and you carry on, right? Let's have a look to the left. Same story here. Watch this now. Pump up, internal range liquidity, break of structure, price pulls back, takes out the inducement liquidity here and here, and then continues. Now, how could you have caught the continuation of that? The continuation would have come in after the inducement level was taken. Here, you'd look for a change of character or break in structure. Simple. Price moved away, price pulled back, broke structure here, pulled back where? Let's mark it off. Here's your order block. Can you see that? You would have then long position, set your order at the beginning, stop below the low, and target the high or higher, weekly open, right? You look at that, price pumping, weekly open. Look at that. The concepts are all there. You just have to understand how they work, and once you can do that, I think fear is the biggest deterrent. Once you get over the fear and you see the setup has to be taken. Now, why did I say pump into the weekly open? Because we had what looks like, and remember now, we're watching this level down here, right? That's what we want. But what's actually happening is price is pumping. Price is going to the weekly open and maybe even a little higher. So what's that going to do? It's going to create some panic where people that didn't get this level here are going to now start buying this pump up here. And then suddenly price is going to do that, and it's going to take all of them out, take the stops out here, because this is what inducement is. If you look in the dictionary, inducement would be defined as an event that causes someone to do something, right? This is the event that causes traders to long, creating the inducement level, later on we take that inducement level. Besides that, in terms of an Elliott wave point of view, 1 2 3 4 5 A B C, 1 2 3 4 5, right, and then a pump. So that's what we look for. That is what we will look for, right? So we've created inducement here now. Watch out for this, guys. The inducement has been created. This is the levels that we are watching, ideally ultimately down here. Pump into here, look for weakness here, take the drive down here, look for a reversal here, and pump back up. That's what we want. I'm not interested in this, even though I mentioned it to you guys here, that we get a pump into the weekly open, right? Mark of the weekly open, pump into BTC is a short. There's a bearish order block there, right? The bearish order block being here, right at the weekly open. Let's mark it off and pull it straight across. If we want, we'll just do it better. Let's do it this way. Mark it off in red. Alright, now we watch what price is doing. Can you see? Now there's also, if we do this, we can get a better idea where we take a fib retracement from the top to the bottom, and that's around the 50%. You also have the 70.5 up here and the 61.8. We see there's a fair value gap there. So you don't take anything, ever take anything blindly. Now we'll look for we will look for reversals up here, right? So either here, pull back, create some structure. We want some structure to be created here first. We don't just want price to go up here and then fall down here, although that will mess people up. If you want to be taking a trade, we need some structure to be made here. So make something here, react here, take it there, break here, pull back there, we enter here, and we ride it down there. Right, and I told you, if we don't get this sort of setup happening here, where we get BTC coming back down to this levels, because there may be a chance that the big guys don't want us to long BTC down here. This is too cheap, and they don't want price to get back down there. So what's the second alternative? The second alternative is we start to break the high here, right? Once we break the structure here, we know that this is still inducement here, that price can just come down and just take this level here. That's all that it needs to do. 1 pip, $1, 1 cent lower than this is inducement enough to take that going up. What's up, Yanni? What's up, Masa Kayla Gregory? 19.8. 19.8 is, yeah, so this created inducement here, where this was the level, this took it, and then it fell down, right? It also took some inducement around here, itsy, and then moved away. You're right, you're starting to see the things. Do the things and see the things. Making money is the easy part, Yanni. I just showed the guys two setups here on how you could have made money, and if you had the time and the patience, this would have led to, let's say you took it from here to here, $300 move, right? In rand terms, that's close to 6 grand. In time terms, it was nothing, right? It was a few hours, if you, depending on where you took the trade, whether you took the trade from the pullback here, or whether you took the trade from the inducement level here, or whether you took the trade from the pullback into the level here, right? 3 trades, 3 setups, all to give you the same outcome. Yeah, over 5K. It's about 1833 at the moment. Right. Let me just have a look at my Discord if there's anything else. I think Poison was looking for a move up to the initial rejection. Yeah. Pull back here might be worth a long. Right, let's have a look. Now, in the next week or so, I'll be doing a video course. Most likely will be on Udemy. It's going to be about $60 or $70, but it's going to teach you from scratch, as if you weren't trading or never traded, how to start trading and how to trade, what to look for. Secondly, I may make an SMT PDF, which will show you all of the patterns and all of the trade entry types. Thirdly, if you want, you could join my Discord group. This is a private Discord group. These are all my members in here. You pay monthly. We go through all of these concepts. We teach the concepts, and more importantly, we chart everything here, right? Crypto, especially because this Discord is primarily a crypto Discord. So most would be crypto, and then we've started to add Forex, indices, stocks, all of that on the other end. And that's a monthly subscription. But you get access to me the entire day, literally the entire day. Yeah, so you have the knowledge, but a lot of people have the knowledge. You just need that slight refinement, Itzy. I think it's the slight refinement that people lack. I think it's also a sense of you get a bit afraid or scared to take certain trades. Let's have a look at something here really quickly, right? I'm going to let's do something here, right? Because we're let's show it to you. You remember me saying there's no trade if there's no liquidity taken. Liquidity was taken here, and price reacted and moved down lower here, right? There was a pullback here that gave us an entry, but that just gave us relative equal lows. Price pumped back up here, took the liquidity here in this order block here. That was the real trade to take, and then price headed down lower, right? First stop here. Price pulled back, then broke again, broke structure. Now remember the inducement part of it. Now remember, when price creates relative equal lows or equal highs, that at some point they will be taken again. Now we know that once we broke structure here and here, this created inducement here. So price came back up and took the inducement, created relative equal highs. Now that at some point is going to be taken, most definitely going to be taken. When it's going to be taken, we don't know, but as price starts to pull towards it, we'll then figure out whether this relative equal high will be a target or not. Same story here, right? Price broke structure, which made this an inducement level here, right? Untouched. Price broke down lower, made this an inducement structure here, right? Bear that in mind. It broke down further here, which made this an inducement structure. Once it took it here, was enough for it to go down here. Once it went down here, where's the target? Now we have liquidity lying here and here, which it took all the way up here. So if we can figure out where price is headed to and why, then we know where the trade setup is, and we know how to make money from it. Now, today or this week, once we get the setup that we want, so NAS could eventually pump back up here to the base. So if we consider this to be the consolidation and this to be the base, we could see a retest of this base, and then price heads down lower to our actual entry point and then higher. So we'll take longs here, and let me tell you here on IFX, for example, if I take 0.1, not 0.1, 0.01 would be the same as me taking one lot of NAS here. If I took 0.1, it would be me taking 10 lots of NAS. 0.1 on IFX would cost me 4,500 Rand, and I would have 10 lots of NAS, so essentially $107,900 worth of NAS, which means that if I get a move from 500 to 11,200, right, that is a $700 move at today's exchange rate, close to 140,000 Rand. From 4,500 Rand. Right, so it makes sense that you can make so much of money, but you can also lose so much of money. But if you get the setup right, then, and we know what we're looking for, then it's the playing field is more tilted towards us in terms of the odds, right? Because we're not looking for setups just anywhere and anyhow. Like, we don't just, not every place there's a green candle is going to be an order block or a level for us to short or do anything. We're going to look for specific areas, and when it gets into specific areas, we're going to look for specific sort of reversal structures forming for us to take the trade. We don't ever take anything blindly, because blind, it can go straight through there, stop us out here, and then we lose money. Right, that's it. This is going to be recorded, dropped onto my YouTube channel. And if there's any questions, you guys know how to get hold of me. You know where to get hold of me, here on TikTok or on my Discord. Which timeframes can I use to identify a trend, and which one is good for analyzing? So identifying a trend will obviously be depending on the time, the type of trades that you're taking. Here, high time frame, we can see that the trend is down. Low time frame, 4 hour, 6 hour, the trend is sideways, right? So unless we break above something or below something, we're pretty much going sideways. But on the lower time frame, if we look at it, we can see that the trend is now reversed from downside to upside potential, right? That means if it's upside potential, when price pulls back, we want to be buying. So analysis will be done on, say, a 1 hour, 4 hour down. Your entries are going to be taken, for me in specific or particular, on a 5 minute to a 1 minute. So if I was on a 1 minute time frame in this particular action here, it means this, right? Price change character here. It pulled back into the level here and moved away. That means it broke structure here as well, that when it comes back into this level, the same level across here, you can see that that's a buy. These are all buys. And then here we broke structure here, price pulled back into the level here. You can see that's the level, and then shut up there. Look at that move. Now that you could have taken even from there if you saw it, and you can see the move you got. Now look what I told you here about 5 or 10 minutes ago, right? Look what I told you here about 5 or 10 minutes ago, that we pumped into the weekend open and the red levels here, but we want to see structure form. So once we get something like this and then the rejection, that will give us more confluence to short and come back down to our actual level and take all of these guys out here. Alright, let's end it there. I'll upload it. Itzy, thanks for staying. I'll see you again most probably tomorrow night. We'll try and make this a daily or every second day thing. Yeah, you can ask me anything anytime about the US30, no problem. But I think you got things covered pretty much. Right, that's it guys. Thanks for the support. Thanks for the likes. And hopefully we can build this up on TikTok every day. Good night.